I'm Kyle Malnati, your host of the Calibrate Real Estate Podcast. At Calibrate, we exist to help people create generational wealth through real estate. My personal mission is to encourage, empower, and educate you by sharing best practices from business leaders that are proven winners. Broadcasting from the Mile High City, thank you for tuning in to episode 149 of the Calibrate Real Estate Podcast. We're knocking on the door of episode 150. Thanks for riding with us all the way. Our guest today, our esteemed expert guest, is Jens Nielsen with Open Doors Capital. And Jens is broadcasting from New Mexico. So fellow neighbor here in the Rocky Mountain region. Jens, welcome to our show.
Thanks, Kyle. I really appreciate the opportunity to talk to you today.
Well, it's going to be an exciting discussion about multifamily. We've been in this multifamily kick. For those who have been listening to us, we've had several multifamily guest experts on, most recently Evan Holiday, obviously Tyler Chesser. We've had a number of other guests that have just been talking about all things multifamily. And so we're going to round out that discussion here with Jens today. Cool thing about you, Jens, and we were talking about this as we're just getting acquainted with each other on a couple of different calls, both today and then a few weeks ago. You've got several deals that you and your wife own together, totaling 75 or so units. And then you've got syndicated deals totaling over 775 units. So collectively over 800 apartment units together. And I think it's really important to demystify or debunk that you've either got one or the other. You've got the Instagram star that, is 25 years old and has 5,000 units and it was all syndicated. And, they have, half a basis point of equity in each one of those deals or whatever it is. And then you've got what I work with a lot here in Denver, Colorado, the, sometimes salt of the earth, but certainly mom and pop family office, could be mother-daughter, could be father-son, father-daughter, whatever combination of a family investor that has done it for 40 or 50 years. And they started with a duplex and they've grown their portfolio up to 60 or 70 units. And people, I think, believe that it's either one or the other. You're either actively involved in multifamily investing and it's not a coupon clipper, it's not mailbox money, or you're like so distant, so ivory tower, and you're doing both. So let's talk about the differences of both types of investments and why you do syndicated deals, but then why also your wife and you own investments yourselves.
Yeah, I think we really started down the path of just buying our own portfolio, and actually it is in Albuquerque, New Mexico, because I started learning about syndication, and I thought I wanted to go down that route, but I also felt like I need to put my own money at risk first, really learn it from the bottom up, not just go in and do, a deal with this sort of syndicate without really knowing what's going on. So we just started buying some smaller deals ourselves and just kind of growing that, learning. And it wasn't until we had, a handful of properties that we felt like it was okay to start taking partners and investors into these deals. And, it was just a natural progression for me because I didn't really know early on that where this was going to go. And, let's just start, buy some deals and see how it goes. And then it kind of grew from there. So it's just a natural start for us, I guess.
One of the things that I have always prided myself in, and I can hear as you answer, is leading by example. I think it's very difficult. Some people may call it selling an investor to work with you if you're syndicating and raising equity or selling real estate. It's very difficult if you don't believe in the product yourself. And a lot of the times the way you believe in it is by investing in it first. And it also gives you an opportunity to calibrate, to iterate, and make sure that you've got your model figured out. So what are some of the things that you learned in the earlier days of investing in real estate for your own family that you then implemented in a positive way with your syndicated investment? What are some of the lessons that maybe some starter investors can have from someone that's now doing this with some scale?
Yeah, I think one of the big things I learned early on, you got to be careful about what type of property you buy when you are trying to syndicate something. Because I bought some lower quality deals myself, and I've had the patience to, okay, maybe it'll be a year or two before they start cash flowing, but I'm okay with it. I'll put the money back into the deal and just, let it ride. If you go into a syndication, your investors are going to be less patient potentially around that. Oh yeah, it'd be a year, it'll be 2 years before we can start paying. Oh, things are not going quite well. That's going to create a much bigger problem for you than just dealing it with yourself. So I learned that early on that, if you buy this deal and you just kind of work through it and fix it up, that's okay. But if you go and buy and syndicate something, you probably have to buy something that's slightly less value add in the sense that is a little bit more stabilized. It's kind of that $5,000-7,000 a door type thing that people go into, and don't go with those heavy value add deals because the risk is just much higher. I know some people are very successful in that area, but I felt like that was just some risk I don't want to take. And I recently said no to a 100-unit deal that I felt was just not going to produce the returns we wanted in the time frame that our investors were looking for. So I think that was one of the big learning experiences early on.
It's great advice and something that you obviously experienced in person. I think it's really important. And I think many of our listeners, many of the people in our audience would know some of this terminology, but value add deals are simply, you're going to have to do some renovation. You're going to have to reposition the asset, change out management, maybe change out the strategy, signage. I mean, there's a heavy capital investment before you get the return. So it's sort of like betting on the come. It's betting on the idea that if we build it, they will come, to use the old Field of Dreams tagline. Now, yield investing, I think what you're talking about more in syndicated investments is we're buying something with an in-place cash flow, an in-place cash on cash return or cap rate that we know that we can deliver on. And we're going to own that for a period of time. Maybe if appreciation helps us and a rising tide raises all boats, we can then refinance that. We can then deliver some equity back to the investors through refinances over years. And they're two very different strategies. So I appreciate you bringing that up. What I think is very interesting is the mission of Open Doors Capital is securing financial future through multifamily investing. And so I've got to ask, because the mission of Calibrate Real Estate is we exist to help people create generational wealth through real estate. So I feel like we're very aligned. Where did that come from? Is there a spot in your life that you felt like, Jens, that financial freedom was difficult to attain? And I know you weren't always an entrepreneur. So what was that journey like of maybe working through, I'm working for someone, and you hate to say I'm working for the man, but I'm working for a paycheck. I'm a W-2 employee or payrolled employee. And then how did you make that entrepreneurial path? And what were some of the steps that you had to get to make that occur?
Yeah, I appreciate that question, right? Because given, if people watching those video, given my gray hair, I'm not a young spring chicken anymore. I'm in my late 40s. And I came to this country 25 years ago, and I just followed the traditional path, right? You get your degree, you get your job, and you save in your 401k that we're all told to do. And this is, apparently the American way now, I guess. And it wasn't, it was great. I mean, good income. I was in the IT field, so it all worked out from a income standpoint, no problem. But I also realized I couldn't generate any wealth that way. I couldn't go beyond my income and my savings rate, right? And it was like, okay, well, it's okay, but I need to do this another 20 years in order to even consider retiring. So about 5 or 6 years ago, I realized that if I wanted to create some passive income, if I wanted to move out of the dependence on a W-2 job, I had to do something different than I had done in the past, right? And then I start reading the books, and of course, like, Rich Dad Poor Dad was not the first one. It was probably the 10th book in that path I read, but I really started realizing that the way you think as a W-2 employee is not a way that's going to get you to any kind of wealth. And I started looking, what are the different ways I can start generating this. And it was through real estate was just the one that came up. And I started down that path. But then I also very quickly started sharing what I'm doing with friends and family and anybody who wanted to listen long enough, because I felt like there's so many people are trapped in this kind of, daily rat race, if you will. And if I could help people just move a little bit outside of their traditional investments, a little bit towards that financial freedom, that mailbox money, that would really help. So that's just one of the things I'm really passionate about, right? And I try to educate people around it. I try to share, going on podcasts and other things, just really share about that idea that we don't have to follow the traditional path going, forward. And it's really, it's been an amazing journey. And if it asked me 10 years ago, where would I be at this age? I would have been like, oh, I'm still working in the IT field. Like, no, that's not the path. And it's so awesome to make that change.
That little blue, or not blue, a little purple and kind of black book, I'm looking at it on Amazon right now, really changed a lot of people's mindsets. It was a paradigm shift for a lot of people in the early 2000s. I remember reading that book when I was working in a restaurant in Laramie, Wyoming, in my junior and senior year of college. And I was a finance major, and it just opened so many thought processes for me about really working in a field where I felt like every day I was investing in my future, literally or figuratively, instead of taking maybe the safer path. And I remember some buddies of mine that were all graduating at the same time from University of Wyoming, and one was in his engineering career, and he was going to be stepping in, with similar level of education, obviously different majors. I was a finance major, but he was going to be making 60 grand a year, and this is almost 20 years ago. And I was going to be making $30,000 a year. And so he's making double than me. And I found out that pretty quickly in multifamily real estate, even though my starting place was lower, the information that I gained and the ability to work in sales and investments, I was making far more than that. I was having 3 and 4 and 5x return on that original salary that I got working for a brokerage team. So it's worth it. And I think that Rich Dad Poor Dad has really meant a lot to a lot of people. At what stage of your life did you feel like you really, like you said, you're seasoned, you've got a little bit, of wear on the tires, but still got a lot of road ahead of you. At what point did you really feel like, okay, I'm going to move into this field full fledged? Because I think that decision, that tipping point, if you will, that's very difficult for a lot of people. The concept makes sense, and you can read a book like Rich Dad Poor Dad, but actually making that move, and a lot of people call that a jump, making that jump into the entrepreneurial journey is oftentimes more difficult than maybe the theory of it.
Yeah, and that path was really around starting seeing some early success through investing in my own deals. It's like, wow, I put this money in, and now somebody's paying the mortgage, and there's money left over every month. I was like, I saw the formula early on, and really that bug kind of, was so that seed was planted. And and then I started slowly growing and growing my influence, and said, okay, I can't do it with my own capital because I'm going to run out of money, and it just will take way too long to grow to that level. So starting connecting with investors and started bringing other people's money in. Then I started seeing the path. I said, okay, this is possible. And once I had kind of seen the path forward, I was like, okay, now I got to go 100% towards that. I will also say there was a lot of fear in there, and especially, I had made the commitment by the end of 2020, I was going to leave my W-2 job. Then we all know what happened in the early parts of this year. And I was like, man, what is going to happen is, is nobody going to pay rent and everything else. But then I made the decision to say, I need some help, if you will. And I started working with a coach who really clarified a lot of things that I was kind of, thinking about, but hadn't put out there. And I made a bunch of commitments around when I was going to leave my job. What were some of the commitments I was going to hold up, to my wife and other things. And that gave me the ability to make that jump. And then luckily my boss was also an investor of mine, actually. We made an arrangement to kind of slowly phase out of my W-2 job. So I'm not fully out of it. I will be by the end of March. But, I think you're right. A lot of people like holding on to this. Oh my God, can I really do this by myself? Because for the last 25 years, I've been employed by somebody. So that's a challenge. There's no question. And this is, as you get older, I think it's more difficult, but I'm on the path, and it's happening for sure.
I appreciate you sharing that the plan changed, and even someone as successful as you are you don't grow personal assets to over 70 units and then syndicated assets over 700 and collectively over 800 with both sides of your business. You don't do that by mistake. You don't do it by accident. It's intentional. It's along the way. And a lot of people would say that that's far more real estate investing than I would ever conceive of. And yet you still feel that like, I want to have that solid base. And I think that's really important because I used, and I intentionally use this word, and I say it to a lot of the brokers in my own brokerage firm, Calibrate Real Estate. It's not a jump. It never is. And I've got a thought leader that I really like that says, look, you've got to wait till the boat gets all the way up to the dock before you step over. And it's slow and gradual. You're not grinding away in the IT field or your W-2 job as much as you were 10 years ago, but you still have that and you still want to maintain that. And especially if it uplifts you and it's an area of talent and it gives you some diversification, keep doing it. That's the cool thing about multifamily investing. If you set it up right, you can do your main thing and you can have this all be a side hustle, or you can convert it over into your main thing and do the side hustle becomes what you did to fuel that business. So I think the concept is, let's make sure we don't kill the golden goose that laid the golden egg. And that's okay. I'm glad that you actually said that, because I think a lot of people think it's either A or B, black or white. There's no in between. And that's, I think, a really important message, Jens, that you shared. So I appreciate that.
Absolutely.
So I know that you're from Denmark. Our audience would probably detect a little bit of an accent. Being an immigrant, I think, is something that is something I have known as a high correlation to success in America. There's actually a book that I really, really enjoyed reading by a thought leader that I love, which is Brian Buffini's The Immigrant Edge. And there's some things we'll talk about in this book, but just what was it like for you immigrating from Denmark, coming to America? And what would you say to maybe some people who are born here in America that feel like the American dream, may be struggling, or it may not be alive and well? And I would say to you, I think that that's bunk. I don't agree with that. But what would you say to people who are from America that maybe have kind of lost sight that there's amazing opportunity here?
Yeah, without being preaching to anybody, I think we all have a responsibility. We have a 100% responsibility for anything that happens to us in life, right? It's not the government, it's not the taxes, it's not the economy's fault, because we all have an opportunity to pivot and change and adapt to outside circumstances. Yes, I know there's a lot of challenges out there, but if we think about it, that we have control and just kind of look towards the future we want to build, and work toward that. And really, I came here. I mean, I wouldn't say I came, $5 in my pocket and all this stuff. I did have a job that I had arranged, so at least I had that going for me. But I didn't have a degree, so I was working full time, and I went and got my undergraduate and my graduate degree in computer science while working. So just the idea of working hard towards your goals and not complain, that, hey, well, just work on the things that you want to achieve in life and be really diligent about that. So that's one thing. I think the other thing is, like, don't expect any handouts. Like, hey, if you want to do well, you just work towards it, and you just suck it up, right? I mean, that's just one of these things. And just think about the support you can build in your life too. Who are the people that can help champion you on, and the people you surround yourself with, right? If you surround yourself with people that are ahead of you, that are encouraging you, that's going to be a much better outcome than your old drinking buddies that just want to go and sit at the bar every night, right? Because it's just who you surround yourself with. And I early on gravitated towards people that were already successful. They were, I got into sports, and I was like, just kind of pushing myself in all these aspects. I don't know if that came from being an immigrant or it's just my nature, but just take responsibility and do what you need to do to get there. I think that's kind of maybe the core principle I took to heart.
It's funny, if you think about your 5 a.m. workout accountability partner, they're often very different from your 5 p.m. happy hour drinking buddies, aren't they?
Right.
Very rarely do the two connect, and I agree with you. For those who haven't read The Immigrant Edge by Brian Buffini, I would say go ahead and grab it. It was published by Simon & Schuster a couple of years ago. I'd like to go through the 7 traits that Buffini did all this research on about immigrants, and see which one or two of these really land with you, and you feel like, oh yeah, that when I was leaving Denmark and coming here, and obviously I had a job, I had a landing spot, but these are the things that really kind of powered me. You ready for that, Jens?
Sure.
All right. So trait one's a voracious openness to learn. Trait two, a do whatever it takes mindset. Trait three, a willingness to outwork others. Trait four, a heartfelt spirit of gratitude. Trait five, a boldness to invest. Trait six, a commitment to delay gratification. Trait seven, an appreciation of where they came from. And I heard a lot of that in your answer, but any one or two of those that you feel like, that is something that your immigrant friends, yourself, really feel like, that's really what fuels me to succeed here in America.
Yeah, definitely around the, wanting to learn, right? Because I I had high school or English, from back home, and it was a challenge even to be in conversations with people. So I was like, man, I needed to first of all improve my English, right, and really get good at that. So that's a common thing. Um, to just go into that. But then just learning, right? Because I felt like, hey, this is in the late 90s, IT and telecommunication was just really taking off. And I was like, this is exciting. There's so many things that I can learn here. And just really, I remember actually, so there's a thing that comes to mind. There was an area of IT I wanted to get into. And there was a guy working for us. And I was like, man, how do I want to be what you do. I want to be like you because I was really fascinated with the stuff he was doing. How do I do that, right? And he gave me a few tips and he gave me like a stack of books and said, start reading this. And this is one of these things I really set as a goal to become. This is in the database administration. I was just very fascinated by that. I set a goal to become an expert in that. And I actually went, when I got my graduate degree, I focused on that technology. So I saw a path I wanted to take. I took the actions to get there, and I just pursued it wholeheartedly, right? And it's been the same thing in the real estate investing. I was like, okay, this is the path I want to take. Who are the people I need to surround myself with? What is the education I need to get? Who are the coaches and mentors and partners I need to align myself with in order to move towards that? And I think one of the things a lot of new investors get stuck in, they want to do everything themselves, and that's fine. And as you mentioned in the beginning, maybe you take 50 years to build a portfolio, and that's fine if that's your path. But also, if you want to accelerate this, you have to think outside that box and really start connecting with the right people to get you anywhere. And I think that's one of the things I learned early on, is really find a mentor to help you accelerate and move forward.
Yeah, that trait number one, a voracious openness to learn, is really that willingness and that curiosity and being humble enough. I think there's a lot of humility in success, which is funny because sort of a juxtaposition. You feel like, and maybe out front you see some successful people, and maybe there's a lot of ego or a lot of arrogance, and you feel like, oh, they were always that way. They were always just born confident. But confidence really is one of those things that I believe gets built as you learn more and as you have people help you along the way. And so it's a good segue into trait number two that Buffini had used, is a do whatever it takes mindset. And you, for our audience, Jens, that maybe doesn't know about some of your speaking that you do, or some of the other podcast interviews, you talk a lot about having the right mindset, and that's a huge part of anyone's success. So what are some actual tools that you use to make sure that you can calibrate that mindset? Because I know, even with some of the successes that I've had in my career, there are plenty of times where I get out of whack. I all of a sudden go, this way, go left when I should go right. I'm late for an appointment. All of a sudden I can get really quickly into that negativity, that negative mindset. So what are some things, again, that you do to really calibrate your mindset on a daily basis? What are some actual tactical tips, tools, things that you can help our audience go through as you're just focusing on that mindset?
Yeah, I love those types of questions. And um, one of the things, right, I get up early in the morning. You mentioned the 5 a.m. Workout partner. I don't have one, but I still go and do my workout in the morning, and just really start working on my journaling, my gratitude, and just instead of grabbing the phone and let somebody else set your agenda for you, just really say, okay, what is the things I want to accomplish today? What's important to me today, right? So set that the start of the day. And then basically, I like what you said about sometimes we get out of whack and our mindset get a little messed up. that happens to everybody. It happens to me as well. But one of the things I think about, if there's a setback or a challenge, you have to think about, is this a permanent thing? Is this a flaw in your character, or is this a temporary thing that just happened to happen right now that you can overcome? And this is that having a fixed versus an open mindset. Um, and almost all the time it's a temporary thing that you can overcome. The timing wasn't right. There was just some other circumstances that you weren't in control over that caused this setback. And it's like, okay, well, what did I learn from this? Let me step back, take a deep breath, and then move forward again, right? Because if you let setbacks hold you back, you're not going to move anywhere, right? So there's been deals we've done that didn't work out, or we weren't the highest bidders or anything like that. Like, okay, well, what did we learn? Let's move forward with that new knowledge, instead of letting that become let that become fuel instead of kind of a baggage you're dragging behind you, right?
It's a great reminder. And from a pragmatic approach, an IT approach, a very kind of even keeled, level headed, a lot of that personality, I think that makes a lot of sense. If you're someone that maybe runs on a little bit more high emotion, you're more kind of enthusiastic and out there, um, certainly pointing to myself there. Sometimes, and Jens, you mentioned this, when you have a coach, and I've had plenty of career coaches, or you have a therapist, or you have a sounding board, a good friend that's someone that can step back and give you that outside perspective. I had a coaching session with my therapist a few months ago, and basically I described a situation that was, going haywire, and I was just kind of down and out about it. She said, I think that was just kind of like a comedy of errors. Like, it just seemed like a lot of things just kind of happened. And yes, you may have been able to handle it a little bit better, but also, like, let yourself off the hook. And it was so freeing for me, because obviously it was all done, and I was kind of dwelling in the moment, or dwelling even longer than just in that moment. And I think that having that sage advice, whether it's a professional coach, therapist, good friend, you would share that that's something that's really impactful for you. So let's talk about the coaching journey and how you find a coach, how you know when it's time to switch coaches, because I've had a number of different coaches that will help me for different things. So how does that look for you, Jens?
Yeah, so I started out. um, I had a bit of a closed mindset around the coaching. It's like, oh, I can figure this stuff out, right? And I'm smart enough and good enough and everything
What a
else.
crock. What a waste of money.
And when I started, but then I also realized, I had done a couple of deals. I was like, well, yeah, I'm not exactly sure what I'm doing here. How can I grow to the next level? And that's why I signed up for, one of these coaching programs you can find online, right? There's plenty of them out there in the multifamily space. And it was some money, but also it has changed my life, because the people that I have been able to connect with was just unparalleled. I would not have found these people anywhere else, and I would not have gotten the push and the up leveling of my mindset, right? Because I'm there, to buying a few smaller deals, and I see people who have like syndicated hundreds of units already. It's like, oh my God, how do I get there, right? And I was like deliberately drawn towards people who are seeing success, because like, these guys have something, or girls have something I want to learn. How can I get around them? And so that was a huge thing for me early on. But then that was the technical side of it. And I think a lot of people, they start up, they want to know the technical aspects of real estate investing. And of course, you need to learn that. But that's not what holds people back. It is the taking action. It is getting outside of your own limiting beliefs and having the courage and the faith in yourself to take action. So that's when I moved towards the high performance. And I followed like the Brendan Burchard high performance model. And when I started working with my high performance coach, I was like, oh my God, the breakthroughs and the change was just like exponential. Yes, it costs money, but anything that's worth having in life is, there's some resources you need to push towards that. And the deals and the freedom I've been able to create based upon that has just paid for this coaching many times over, right? So it's totally worth it. Um, yeah, and I'm actually getting certified myself to be a high performance coach too. So because I'm so enthusiastic and passionate about that, so I love being able to help people in that aspect as well.
I love that. Someone that's experienced the benefits of coaching. Now you're going to be helping others do it. And as one of the adages goes, the teacher oftentimes learns more than the student, or is the best student because they were constantly needing this information, and they're now disseminating and sharing it out with other students and going to the next generation. So I think that's great, Jens, and I'm excited to see what happens there with your coaching clients. And I think you bring up a really important point. It's not just the information that you would gain from a coach, but it's the audience around the coach that I think is really important. And a brief story, a brief testimonial from my own experience. I'd invested a lot of money in this very high ticket week-long event that was fairly small. It was 150 business owners and some spouses, and it was a deep dive. It was a master level class in person in Nashville, Tennessee. And I bump into someone that's a thought leader and an author, a guy by the name of John Acuff, before this event. And John used to work for this organization, which is called Ramsey Solutions. And I just was in the book line getting a book signed by John. I was like, I'm going to this Entreleadership Master Series. And I know you've spoken on stage with Dave Ramsey. I know you've worked with him. Do you have any tips for me on like how to really just get the most out of my investment? And he said, yeah, he's like, a lot of the learning is not going to be just what you see on stage. It's going to be the people you're hanging out with and the people you're interacting with. And so don't focus it solely on what you're learning from Dave and from the speakers. Obviously, you're going to gain a lot there, but you're also going to get a book and you're going to have all these videos that you can reference for a long time. So don't miss out on the people who are around you and networking with them and finding that. And that was something that really stuck with me, and obviously something that you've seen demonstrated multiple times. It's just getting in the room, and that person has a really powerful group of people around them.
Yeah. No, bar none. I mean, I'm so bummed we haven't been able to go to any events for quite some time, right? Because that has been the stuff that happens in the hallways at these events is so much more interesting as interesting as what's happening on stage, right?
Yes, absolutely. And hopefully, this is being recorded in 2020. Depending on where you are, there's different levels of openness. But hopefully that changes. Hopefully, obviously, we get as a country and as a world, we get to a spot where everybody is feeling that it's safe to go out, and those events, those gatherings, that community that's around it is really important. Jens, as we close out our show, I always ask two real important questions to every one of our guests. And so hopefully you're game for that. Hopefully that's something that's okay with you. You good for that?
Absolutely.
All right, Jens, the first question is this concept of dear younger me. You would self-describe that you've got a little bit of salt and pepper in the hair, and maybe a little bit more salt than pepper. And, as we meet younger people and we interact with younger folks, I always find it's important, as someone that has gotten a lot of benefit from mentors, to give back and to pay it forward to the next generation. So this concept of dear younger me, it comes from a song that I really enjoy. And what's not in the song, but one of the fun things that I've kind of dubbed is, this is the advice you wish you knew when you were 22. If you were writing a letter to yourself, now that you're a little bit older, what's some advice that you would impart to that younger version of yourself? And how would you give advice if you were able to kind of intersect with your 22-year-old self?
Yeah, I think the best advice is that don't blindly follow what society's norms are. Look towards a future, a vision of your future that's bigger than what you may have seen in your family or your friends, right? And have the boldness to dream beyond that, and then also figure out who can help me get there, right? Just really start asking questions to people that are in that position that you want to be in, I think. And having the courage to do that, because if you're a young person, you may not want to go and talk to the 30 or 40 or 50-year-old entrepreneur or something like that to help you move forward. So, but just find a way to surround yourself with people that are at the level you want to be in. And one of my vision for my part of my vision is to go back and help that younger generation to see some opportunities and possibilities that I didn't see. I had a ton of limiting beliefs when I was young, right? If I could just push somebody, a little bit in their journey early on, I think that could make a tremendous impact on their life as they as they grow.
Jens, that was a great answer. And there's a part of it that I really want to dive deep on. And I don't do this a lot, but part of your answer is something I've never heard before. And then the follow up with things that I've definitely heard of, seeking out mentors, having the humility to say, I don't know what I should know, and help me out. I'm 22, you're 52 or 62 or whatever. Those are things I've heard of, but the boldness to maybe think through things differently than what your kind of normal society, I would say this is the way to do it. Th- th- that's something that it makes sense. And obviously your story lines up with that, but there's something deeper there. So what are some of the messages that you think that society puts out there that maybe younger people are hearing that like you need to go counterculture? And I agree with you. I think if you want to make an impact, if you want to do some big things, you're going to have to go outside of what the pack is doing to really make that impact. So I want to isolate in on it because I think there's some real gold in that.
Yeah, and I don't know what it's like to be 20 years old now, right? But and you have a lot more resources now available to you in terms of all the knowledge that's out there. But I still think there's probably so much attention or value put on the traditional educational system, which is really the 4-year college. Is that really the right way of get ahead in today's world? I mean, if you can be an entrepreneur, you can find a way to solve somebody's problem. Maybe that doesn't take 4 years of going to college, for example, and building up this a massive amount of debt, right? I mean, that's just such a hamstrung if you start out with a couple $100,000 worth of debt in the beginning of your life, right? So, are there ways that you can still have a meaningful impact on society and grow as a human without going through the traditional educational system? And if my wife heard this, she would probably be very upset because she is a college professor. So, but I just question that to some degree. It worked out for me, but is this the right path for people, right? Because I think you can just create stuff now without necessarily having this traditional degree. So that was one area I've been thinking about.
Yeah, that's a good point. And I don't think your wife would be, yelling at you or anything like that, because here's my perspective, and some know this story, some don't, but I think it's important. I went to University of Wyoming. I graduated in 4 years with a degree in finance, but the first year and a half, the first 3 semesters were a hot mess. I actually failed out twice. I got kicked out of school twice, petitioned my way back in. I mean, like beg, borrow, and steal, not quite literally, but did everything I could, hands and knees pleading to get back in. And most importantly, and the embarrassing part of this is my sophomore year, my wife had transferred from Colorado State University to University of Wyoming to be near me, and frankly, probably like be closer and watchful eye, as we're dating. And, I was a mess. I was hanging out. I was having a lot of fun, getting horrible grades. And, just kind of like trying to figure life out. And I would say that experience of falling flat on my face, having my parents say, look, we can't financially support you anymore because clearly this is not a winning investment. And magically, as soon as that happened, my grades got better, my study habits got better. I mean, when I had everybody saying, no, this is not for you, and that door was closing, which I think is important for someone with open doors capital. When that door was closing, that was a message to me, like, how committed are you? And I think that was important. And college, like if I could summarize college, obviously I've got the degree, I've got, that gives you, especially as a young person, that diploma at least gives you some confidence. It's not going to do anything for you. In very rare occasions will it, but what I would say is that learning experience of figuring out how I needed to be successful was really, really important. And that was worth the entire tuition, was actually failing out and then getting back in and working that through and figuring out what my study habits were. So I don't think college is all bad, but I do think there's a large group of people in our United States economy that really should be going to vocational schools. And my brother-in-law is a professor in Wyoming for a technical college that does a lot of automotive and diesel. And there's some smart kids that just work with their hands and don't need to go to a 4-year institution. And so there's all sorts of different options. So I do agree with you. And I also think that there are some that are in college that there's tons of learning there too.
Yeah.
All right. So last question, Jens, actually comes from the prior question. My late great career coach, Chris Oakley, in episode 5 of this podcast. So quite a long time ago, he was in the first couple of episodes. His answer was one of those really impactful answers to me. So he said that in that Dear Younger Me question, he said that he was in a mentoring group in his 20s where, and this has got a lot of parallels to things that you have talked about. This mentoring group encouraged this group of young 20 somethings to read a book called The Principle of the Path by Andy Stanley. And in that book, the author, Andy Stanley, encourages his reader to write their own obituary, which is kind of a tall task. It's a big exercise. And I like to kind of spin that just a little bit and say, think of a loved one delivering your eulogy. And this is a legacy question of what do you want to be known for, Jens? What are, hopefully it's decades from now, and hopefully, it's a peaceful passing, but we don't know how much time we have on this earth. We don't know what that big clock in heaven looks like for our life. And so with that idea that legacy is important, especially with multifamily investing, what would you hope to be known for?
Well, I love that question because I actually had, when I was working with my coach yesterday, we were talking about contribution, and it actually got into some of those questions. And
oh, cool. I like this.
right? It's funny how the universe conspires. And really, the answer that came to me was around somebody who was caring and generous and really took the time to listen and, just help people see their own value and their own inner possibilities and helping them grow, right? I mean, that's really, wealth and all that stuff is great, but it's not really a super strong motivator for me. It's more like the personal connections, right? So if I can be known as somebody who had a positive impact on people throughout the next 50 years of my life, right, that would just mean that would be a life well lived to me. So just the one-on-one personal impact is just such a huge thing to me.
I like that answer. And so I think in coaching, you obviously can do that with syndicated investments. A lot of times people think of the financial aspects of it, and also your family investments too, but it's very difficult to be generous without any money behind it. A lot of times people think of the volunteer aspects, the time spent, which is certainly important, but nonprofits, if they don't have enough revenue collected from donations to fund what they're doing, they'll go out of business. Doesn't matter how charitable they are. And so I think that's an important aspect of investing, is you've got to remember that there's a good side and there's a bad side. There's an evil side. And if the good people in the world, raise enough up, they can have that investment really pay it forward and do well. And I think that's important as people think about real estate investing. It's not a greedy pursuit. It's one that can be a generous pursuit. And I think that's very important, Jens. It's a good reminder. Are there any particular pursuits that you feel like are maybe linked to multifamily housing that you say these are things that I'm leaning into, whether it's coaching young investors or also just talking to people that may be involved in the housing industry that are maybe some nonprofits that are important to you?
I mean, right now we're focused on just providing clean, affordable, safe housing, right? By taking properties in maybe not the greatest parts of town and just, hey, let's make them nice. Let's give the people a good place to live at a decent price, right? So that's kind of what we focus on now. As I continue to move down this path, right, I would love to have a way to help people that are maybe stuck in a little bit of a lower socioeconomic class to maybe even do some coaching or help them and said, okay, this is what you're doing today. It doesn't have to be, you don't have to be at this stuck here, if you will. You can do small things to improve your life. And moving towards that is something that I'm dreaming about. I haven't really seen the path for it yet. And I think that's still developing for me, but just that opportunity to, because if we bring up everybody in society, it helps everybody, right? We talk about this gap between rich and poor and all these things. And if we can close that a little bit, everybody will be better off. And so that is a dream for me. How exactly that's going to look yet, I don't know. I'm still working through that.
Well, Jens, that's a great reminder. I mean, just a base level of that is just clean, reasonably attainable housing. There's so many investors out there that believe in, squeezing every last dollar out of the investment, and some will call them slumlords. And I can tell that you don't operate that way. And so I very much appreciate your perspective. For people that want to connect with Open Doors Capital, simply opendoorscapital.com is a great resource for that. Jens Nielsen, I definitely appreciate your thought process, your feedback. And I know that you've blessed a lot of people with your information, and you're getting out to thousands of people now, where you just did, a coaching session for 45 minutes. So I definitely appreciate that. I want to remind our audience that one of the ways we grow this podcast is obviously a subscribe on Apple Podcasts, on iHeartRadio. Say, hey, Alexa, play the Calibrate Real Estate podcast, and you'll hear that come out. One of the other ways you can do that too is just by going to Jens' website, going to my website, calibrate.re.com. The guests on the show have usually a lot of openness and communicating with people, and maybe it's even 5 or 10 minutes that they could spend with you on the phone. So please connect with us. And for Jens Nielsen, for our podcast producer, Kayla Davis, I'm your gracious host, Kyle Malnati. As I love to say, we will see you around the neighborhood. Thanks, everybody. Have a great day.
Thank you.
Jens, thanks so much. You may have remembered this or seen this in our email. We believe in having this kind of farm to table type of podcast. We keep our content fresh. We don't bank it. We don't batch it. This is going out on Friday. So
Okay.
It's going to be right, which is great, because I think that for someone, you just spend 45 minutes to an hour with me. And I think that the excitement around sharing things is a lot easier when it doesn't come out 4 months later.
Right.
So what will happen is Kayla will send you an email that will just itemize everywhere we've shared this podcast, on Instagram, Facebook, our website, and however you want to share it, great. Because it's a multifamily investing type of podcast, we'll actually send this out to our email list of 8,000 investors, brokers, people. So it's going to get a lot of feedback. Obviously, if you want to package that and send it out however you do to the people that you're connected with, we spent a lot of time together. We'd love to grow our message. And I'm just so appreciative that you shared with me today.
Absolutely, Kyle. It was a lot of fun. I really appreciate your questions. They go deeper than many other podcasts, and that's kind of I love that versus just the technical side of it. So
yeah,
awesome.
I try to be relatable, try to get to know each one of my guests, even though it's obviously virtually. So I definitely appreciate that. And I enjoyed our call a few weeks ago. So stay tuned. It's going to be right out on Apple Podcasts as kind of our main area of focus this Friday. And I'm super excited, man. Thank you.
All right. Hey, have a good day, Kyle. See you.
All right.
Bye.
Thanks, Jens. Bye-bye.
Bye-bye.